What's up everybody? Welcome to the Stocks channel. My name is Cory and today we saw another very volatile sell-off in the stock market and we continue to see the tech correction playing out. The good news is the market is still moving exactly how we've expected, and if you've been following along, you should be well prepared for this correction. So first up, let's take a look at the Nasdaq 100 QQQ's ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so first things first, if you've been following along on my channel and you've been following along on this ABC tech correction and you know how valuable this information has been to help you out in this market, please help out your fellow investors and traders by smashing that like button to help more people see these videos. Alright, so in tonight's video, I'm going to do a very detailed and educational episode because I want to make sure that you're fully prepared for all of the possible scenarios, and I want you to also be aware of when this tech correction is likely going to be over so that you can position yourselves accordingly. So on the QQQ's ETF, we did see a huge sell-off today going down 2.9%, and we did close below our support level at 313. So if you've been following along, you already know that we're expecting an ABC correction and we're well underway. But if you're new, I want you to pay close attention to this information because this is going to help you navigate this market with a lot more clarity. So we initially had our sell-off, which completed wave A. We then bounced and had our wave B complete at the high. And remember, I said that that was going to be a bull trap and it was going to feel good and it was going to feel like we were going to brand new all-time highs and it was going to suck in the bulls and trick them before the next sell-off. As you can now know, that's exactly what happened and we're still continuing to sell off. So at some point, we're going to see the C wave play out. And the question is, where is the C wave going to bottom? Now, there's no way to know exactly when it's going to bottom. So I'm going to teach you tonight how to watch the price action and how to be prepared to see what this bottom is going to look like. So with the C wave, it's possible that we actually truncate and we don't go nearly as low as the A wave went, and we close somewhere around this 308 to 307 level, and that would be the end of the C wave. However, if the price action blasts right through that support level, that means the C wave could come all the way down to 297. So the price action is always going to be key, but as you can tell, being prepared and understanding that we are going into an ABC correction still helps you understand the direction of the market. So why we've been so accurate in predicting this market is because we did expect to see this correction ever since we hit those price targets that I gave. Remember, after we finish 5 waves, we do expect to see corrections, and that usually happens in an ABC down wave. Within this ABC, there's smaller wave structures that we did go over in last week's videos, and we will go over again tonight because I want to make sure that everybody is understanding exactly what we're watching. So in tonight's episode, it's going to be longer and it's going to be educational. So if you're interested in learning more about this, you will want to stick around. So right now we're trying to figure out where the C wave is likely to bottom, and our first scenario is that it's going to bottom somewhere around this 307 level. There's also a support level that goes back to 308, so this level should be a strong support, and I would expect to see the price action at least try to hold up around this level. So keep this in your mind that we're on a daily chart and this is the ABC structure that we're watching, because I'm about to switch over to a 1-hour chart and start breaking down the smaller wave structures. So we're now on a 1-hour chart and I want to show you the wave structures that we're following. We completed wave A down, which was a 5-wave structure to the downside, and after that 5th wave completed, we knew that wave A was likely over. On the 5th wave, we knew the wave was ending because we saw a pivot and we saw the price action start heading higher. Once we broke back above 313, that told us that wave 5 was over, which also meant that the wave A was over, which I showed you on the daily chart. Now to the upside for the B wave, we were looking for an ABC structure to the upside, and once we completed an ABC to the upside and we saw the price action pivot, we did start heading lower. We closed lower below the low for the candles, and we knew that the high for the B wave was in and that we were going into the C wave. So if you've been following along, you already know a lot of this, but I want to make it super clear in case you're new or you just didn't understand it the first time we talked about it. So that completed wave B, and now we're going into wave C, and we're looking for 5 waves down. So with today's price action, we can easily count 5 waves down in this 1-hour chart, and we can see that we did maybe potentially put in a bottom today. We're also right near that 308 level, and we are closing near the lows of the day. So don't forget that it's possible that tomorrow could be a bear trap. A bear trap is going to look like it's going to pull in the bears, and just when it looks like it's time to short this market because it's going into free fall, it's actually going to bounce and we're going to start heading higher. If you watched my video this week that was called Bull Trap, it was the same exact story except it was designed to trap the bulls. At the top of the B wave, the bulls were thinking it was going to brand new all-time highs and they got trapped for the wave C down. Now we're trying to trap the bears and it looks like we're going lower, but there's a good chance that we actually bounce and we're expecting to see an ABC to the upside. Now don't forget we do have our resistance trend line, and this resistance trend line is still stopping the price from going higher. So until we break out above this resistance trend line, we are still in a downtrend and we're still being bearish, even though we do expect to see a bounce in the short term. We can definitely count 5 waves down. So once we see that 5th wave bottom, which might be somewhere around that 308 level, we're going to expect to see 3 waves up in an ABC, and I am expecting to see resistance somewhere around that 319 level, which also coincides with our resistance trend line. So I am expecting to see a bounce very soon, but I want you to be defensive because if we fail to break out above this resistance trend line, it does mean that we can go lower. So now I want to zoom out on this chart and I want to show you how we could go lower in this market. So a 5-wave structure to the downside on a smaller time scale turns into wave 1 on a larger time scale. So essentially what that means is these 5 waves would be wave 1, this ABC to the upside would be wave 2, and then we would continue down in a 3rd wave and then obviously bounce for a 4th wave and finish out lower for a 5th wave. So we're not going to get too far into that right now because it is still possible that we did bottom and we could be heading higher from here. If the correction is over, there's only one thing that we need to watch. We simply need to watch where this ABC bounce is going to end. And if we do see the price action break out of our resistance trend line and we get a back test of that level as support and we continue to bounce and form a higher high on this chart, that means the correction is over and we likely saw the bottom. Now I'm going to show this again, so just be patient if that didn't make sense. But right now I want you to understand that I am expecting to see a bounce from these levels very soon. Whether we get it first thing tomorrow or whether it comes on Friday, just know that we're due for a bounce and we are likely to see higher prices in the very near future. Now, does that mean that the downside is over? Only the price action can tell us if the downside is going to be over until we test this resistance level. So I want to go ahead and clear this chart and then I want to show you exactly what the breakout we want to watch is going to look like. Okay, so the chart is now cleaned up and this is what I want you to watch for a potential breakout. If you're a bull wondering when to get back into this market and you don't want to put on risk by buying now and you want to wait to see when this downtrend is broken, this is what you're waiting for. You want to see the price action bounce off of one of these support levels. You want to see the price action come out, break through this resistance trend line, then retest that trend line or another support level as support, and then we want to get a confirmation bounce and we want to see prices close higher. Remember when I say close higher, we saw a breakout, we saw a test of that breakout as support, and then we take out the previous high and we continue to trend higher. If we see the price action do that, that means the correction is over, the bottom is in, and we're resuming a bullish market. That could mean we're going back to new all-time highs, or it could mean that we're just going higher from these levels. But either way, if we see the price action do this, that means the correction is over and we're going higher. The other scenario is that we do this ABC to the upside, we get rejected at resistance, and we continue to head lower, and we take out this low here. That means that we are going much lower. So those are the only 2 things that I need you to pay attention to on the price action right now. Everything else is noise, and just when I'm telling you that we're continuing to expect more downside doesn't mean that we can't see a bounce along the way. So I am expecting to see a bounce in the short term, but if we fail to break resistance, it could mean that we're heading much lower. And don't forget, we still have the gap to fill at 302, and we could also head all the way down to QQQ levels of 297. So you have those 2 scenarios. One's a bullish scenario and one's a bearish scenario. And I have both of those scenarios in my mind, and I'm going to let the price action show me which one is actually going to play out. That is how you remain a disciplined and profitable trader. You don't take a bias or a guess on what's going to happen. You let the price action confirm it, and then you make the trade. So I hope that educational portion of this video really helps you understand what I'm watching for. And remember, if you're on the Stocks Channel Discord, I'm going to give you intraday live updates on what to expect anyway. So if this doesn't make sense, don't worry, because I'm still going to give you these updates and I'm still going to let you know when I see the market turn bullish or remain bearish and we expect to see lower prices. All right, so with that being said, let's jump back over to the daily chart on the triple Qs, and we can see that we are coming in very close to that support level, and I am expecting to see a bounce off of one of these supports. So right now I want to pay close attention to the support level at 308, and if we do break below that, don't forget it is possible that we could come back and close the gap at 302, and possibly even head lower and test support at 297. So we're still in this wave C of this correction, so I want you to remain defensive and I want you to be patient. As you can see, the trend is very bearish and the 5 EMA is picking up momentum and it's now breaking below the 50 EMA. The price action still below the 50 EMA and we have a bearish trend in the short term. In the medium term, the 20 simple moving average has rolled over and it's heading negative. So there's no doubt that we're in a bear market right now, and we can also see the 50 EMA is rolling over and heading negative. So that doesn't mean that we can't come out of this correction and go back into a bull market, but it does show that this is the best time to be defensive. If you know what you're doing, you could also short off of these resistance levels, but you also need to make sure that you're covering your short positions when you see the price action break out to the bull side. So resistance levels above are going to be 313, 319, and if we do break out of 319, we're going to start looking back up here towards the 324s and the 326s. Right now, 324 and 326 are not likely price targets until we get a confirmation breakout of that 319 level. Next up is the S&P 500 Spy Etf, and we saw the S&P 500 going down 1.32% and closing right on top of support at 381. If we break below this support level, there is the 50 EMA, which is still positive sloping, and that level is going to be support at $380. If we break below 380, don't forget about the gap fill at 377, and that should be a very strong support level. It is likely that the triple Qs are going to drag the S&P 500 lower because the Spy ETF does have a lot of tech weight, and if the tech sector is going lower, it's going to be very hard for the S&P 500 to go higher. Now to the upside, I want you to watch resistance levels at 384, and then the 20 simple moving average at 388. Just like on the triple Qs, we do have a resistance trend line on the S&P 500 Spy ETF, and we will have to break out of that level to get bullish on this market. Just like I said with the triple Qs, we're looking for a break of that resistance level, a test of support, and then we'll look to see if that level acts as support and we get that confirmation bounce, which means we could retest the previous all-time high. If we fail to break out of that resistance and we come up to here and get rejected, we could start heading back lower and things could start getting more bearish in the stock market. So that resistance trend line is going to be very key because it's going to tell us whether the market is going back into a bull market or whether it's going to remain in a bear market. So on SPY in the short term, we have bearish trending. The 5 EMA is trading below the 13 and the 20, and we are getting close to having the 20 simple moving average roll over and start heading negative. So in the short and medium term, there's not a whole lot of bullish trending anymore, which means you don't want to get too bullish on this market until we see a break of that resistance trend line. Jumping over to the Dow Jones ETF, we only went down 0.38%, which shows that the Dow Jones is still showing relative strength compared to the S&P 500 and the NASDAQ 100. We closed right on top of support, right around that 313 level, and we continue to see some bullish trending in the Dow. The positive sloping 20 simple moving average is still heading up towards brand new all-time highs, and the trend is still bullish. So on the Dow Jones, we still see strength even though we did close below the 20 simple moving average today. Compared to the S&P 500 and the NASDAQ 100, we see the Dow Jones continuing to outperform. So watch support levels at 313 and then down here at 309. If we start breaking down below 309, the Dow Jones will start looking more bearish, but in the time being, the Dow is still looking pretty good. Watch resistance to the upside, which is now going to be around 314, 316, and the previous all-time high at 320. On the Arkk ETF, we went down a whopping 6.29% today, and we closed right on top of support, which is right around $124. If we break down below that support level, the next one is a gap close around 117. As you can tell, the Arkk ETF is getting heavily sold off, just like we see in the tech sector. So be patient and remember to wait for a break of this resistance trend line before you get bullish. To the upside, we're going to have resistance at 135 and then the 50 EMA at 137. On the VIX, which is our fear indicator, we did go up 10.66% and we closed above both resistance levels. Remember, with the VIX, the higher it goes, the more fear we have, and it means the more volatility and the more selling we're likely to see. So I am expecting to see the VIX cool off a little bit as we come into this tech bounce. But don't forget, if we fail to break out of that resistance level, we're likely to see the VIX spike again as we continue to sell off. So right now, you want to see if the VIX is going to try to take out this previous high at 29, or if we're going to come back down below resistance at 26 as we continue to bounce in the short term. On the US dollar, we're still holding up below resistance at 91, and we're definitely seeing the dollar sort of going sideways, not really doing much, but it is stopping its downward trend. So the dollar is strengthening and we need to continue to keep an eye on it. On gold, we continue the downtrend, and I'm looking for gold to get back to the support level at 1686. At that support level, it's possible we bounce and head back up to our price target at 1761. On silver, we're breaking down below the 50 EMA, and it looks like we're coming back to retest support at 25. If we can bounce off of 25, we'll be looking for silver to come back up to 2650. On Bitcoin, we're breaking out, and like I said with Bitcoin last night, it does look like it completed this ABC correction, and it's getting ready to head higher. That's good news for the stock market because Bitcoin is a speculative investment, and if Bitcoin is heading higher after a correction, it could mean that the stock market is right behind. So right now we see Bitcoin going back into a bull trend. The price action is closing back above the positive sloping 20 simple moving average, and it looks like it's ready to start heading higher. On Bitcoin, I have a brand new resistance level that I want you to watch, and it's right around $54,700. If we break over that level, it's likely we're going back up to the previous all-time high at 58,000. On Amazon, we continue to break down below support levels, and Amazon is not looking great. It's getting sold off just like the rest of the tech sector, so we need to continue to watch the NASDAQ 100 until we see this correction ending before I expect to see strength return to Amazon. So for the time being, if you're trading Amazon stock, you may just want to be a little more defensive and wait until we see more strength in the tech sector. You're now going to have resistance levels at 30.33 and then up here at 30.90 because those were previous support levels. On Tesla, we continue to see selling, and we did go down 4.84% today. It does look like Tesla is well on its way to retesting that support level at $618. Remember, on Tesla, we're in a strong bear market, and we continue to close below a negative sloping 50 EMA with a very strong bear trend. So watch the support level very closely at 618, and if it does break down, you're going to be looking for the next support level right around the high 550s. Resistance is going to be above around 696, and the 50 EMA is now at 738. On Apple, we continue to see selling, and Apple is now going down 2.45%, and it closed right on top of support around 122. There's one more support level below at 120, and if that level does break down, it's likely Apple does come out and come all the way back down to 114. This could go hand in hand with a deeper tech correction, so we need to continue to watch the price action very closely because it's going to tell us if this correction is over or if we're expecting much lower prices. On the financial sector, we went up 0.78% today, and we're still closing over top of the 5 EMA with a very strong bull trend. On the industrials, we went up 0.11%, and we're closing over the 5 EMA with a strong bull trend. On the energy sector, we went up 1.47% over the 5 EMA with a strong bull trend. So as you can tell, this is still a sector rotation because we still see strength in the financials, the industrials, and the energy sector. If this was a broad stock market sell-off and a broad correction, we would not be seeing these three sectors continue to look bullish each and every day. We still see bull markets in other sectors, which is great news in the longer term of the stock market. On the healthcare sector, we went down 1.27%, and again, we're still in a very strong bear trend on the healthcare sector. So we continue to see weakness in the tech and healthcare sector, but we also continue to see strength in the other sectors like financials, industrials, and energy. So going back to the S&P 500, remember that this is still a volatile tech correction, which is caused by a sector rotation. We're seeing money leave healthcare and tech and going into the reopening plays like industrials, financials, and energy. So be patient and be disciplined and let the price action tell us when this correction is over. Don't forget to diversify your portfolio and don't have all of your money in healthcare and tech right now. There's still a lot of well-performing stocks in other sectors which you can take advantage of during the sector rotation. So continue to watch these critical support levels and these critical resistance levels and let the price action be king because price action is going to tell us whether this market is going higher or lower from here. Remember, on the Stocks Channel Discord, I'm giving intraday updates and I'm keeping you in the know every single day. So if you haven't already, come check us out at the Stocks Channel Discord. You can find out how to join the Discord server by clicking on the link in the description of this video. So next up, let's take a quick look at our hot stock, which is Lockheed Martin. And we did see Lockheed Martin going up 0.69% today and blasting through another price target intraday, which is up there at 344. So if you missed Lockheed Martin the first time we put it on hot stocks, we did hit all three of our price targets, even though we didn't get up to the last one. But you can see on the Bollinger Bands, it's not likely we're going to get up to that last price target until we go back into a bullish trend. So focus on these first three price targets because this was a great buying opportunity off support at 333, and we did blast through the first two price targets already. We still need to close over 344 before we can get to the next price target at 348. So Lockheed Martin is still doing great as a hot stock, and it's still outperforming the market. As you can tell, it was green 2 days in a row. In the last 2 days in the market, we did see selling. So if you want more hot stocks, come check out the Stocks Channel Discord. You can find out how to join the Discord server by clicking on the link in the description of this video. So thanks for watching, everybody. Remember to stay disciplined and patient in this market. And as always, I will see you in the next episode.